Hey traders, today I'm going to share with you some powerful insights about previous day highs and lows. Something that could transform the way you trade. Now, you've probably heard of traders rave about their favorite tools. The VWAP, the Fibonacci retracement, the RSI, volume profiles, you name it. And while there are endless opinions out there, there's one thing that every profitable trader can agree on, and that is liquidity. Price is always hunting for liquidity. Now, liquidity is just a fancy way of saying that price is going to chase after buy and sell stops around key levels, specifically swing highs and lows. And guess what? Previous day highs and lows are hot spots for liquidity. In fact, 90% of the time, a previous day high or low is going to be ran. So today, I'm going to share with you some little known statistics that will help change the way you look at previous day highs and lows. Let's dive in. So I've analyzed over 200 days, focusing on the behavior of previous day highs and lows. Now, here's what I found, and on the screen are the primary three examples that we're going to be talking about. Now, you're going to see these blue lines. These are the previous day highs and the previous day lows right here. So this low and this high came from this day. So here is that high, and here is that low, and it's lined out for the following day of trading. Now, what we're seeing here are the three primary ways you're going to see price form. And we're going to start by this middle one right here. We're going to call this the fake PD break day. This happens 11% of the time out of 200 trading days, where price is not going to run the high and it doesn't run the low. It kind of consolidates, as you can see right here. Now, the day for this one is Wednesday. You can see on the bottom of the screen right there, that red black block. But some of the characteristics for PD break, or for fake PD break days, is going to be the following. It normally will follow double PD break days, which is right here. This is a double PD break day, and we'll get into that in a second. Now, when it follows a double PD break day, it stays inside. It consolidates after a very large move. It consolidates. Also, it can happen frequently on a Monday. Mondays are notorious for being accumulation or consolidation, as you can see right here, which is a Monday, but this one ran the low. It just stayed around that level the entire day. That's a great example of a Monday. Now, sometimes it will not run that previous day low or high, and it will stay inside it completely. Now, here's an example of a single PD break day. Now, this is gonna be what we're gonna focus on predominantly in this video. And this is because this happens 77% of the time. So let me give you the statistics here real quick. This happens 11% of the time, a fake PD break day. This is a double break day. Great moves. You want to learn to identify days like this. However, this happens 12% of trading days out of 200 trading days that I analyzed. This predominantly will be what you see 77% of the time, and this is where we want to spend our energy. What are some of the characteristics about single break days that we can identify to help us capitalize with our model, maybe targeting the previous day high or previous day low, or taking a reversal from the previous day high, as we see in this example right here? Let's talk about the two ways you're going to see price form in these single break days. You're either going to have price open within the previous day high and low, as we see right here. This vertical line is representing the 9:30 opening price. This is really what we care about. As price opens right here, it moves higher. Where is it moving to? You guessed it. It moves to the previous day high. Now, here is a very, very useful statistic. 80% of the time for single break days that we open within the previous day high and low, 80% of the time we will run that previous day high or low in the AM session. Now the AM session is from 9:30 New York time to 11:30 New York time. You need to write these down. 80% of the time, it will run that high in the AM session. So what does that mean? We can actually target it and use it as one of our targets. So as you can see here, 9:30 opens and it aggressively moves towards it within the first hour of trading. By 10:30 or even before 10:30, it's already ran that high. Let's look at another example right here. This is another single PD break day. Why? Only one previous day high or previous day low is being ran. Here is 8:30. It's obvious we had some news come out at 8:30. Then we have 9 o'clock and then we have 9:30. So I'm editing this video and I realized that I never gave you the second thing that we need to look for when we're looking at a single PD break day, and this is going to be our next example. I was about to explain that we had a 9:30 opening price. Now the difference between this example and this one right here is we opened inside the range between this low and this high. This day we opened outside of the range. And a couple statistics that I need you to understand is that even on a single break day, when we have a single break, whether it's inside or outside, 80% of the time, whether you're outside or inside, we are going to target that previous day high. So 80% of the time it's going to hit in the AM session in these two examples. I looked at the statistics on whether do we come back and always hit the previous day high when we open the opening prices on the outside or above or below the previous day break. It is about a 56% odds that we're going to run and hit this previous day high. Now that leaves about 40% chance or so that price will come towards it, never hit it, and then continue higher. I just want to make sure I made that clear. So let's go ahead and jump back into the video. So 9:30, price at 9:30 runs for what? It runs to the previous day high. Yes, it already ran it here, but man, it's like it's a magnet. It wants to tag it again. Now it runs through it and then it stays here and consolidates and chops back and forth and continues to move higher, not even running out this high that was formed at 9 a.m. Let's go to another day. What do you see here? This is what we will call a double break day right here. We run the lows early in the next day trading session at 6:30. We consolidate around here and then we take off for that high. When does it start taking off? You guessed it, 9 a.m., 9:30, and we explode, running that high by 10:30. Let's go on to another example. Here is another single PD break day. You can see price is lethargic throughout most of the morning. And what happens right at 9:30? 9:30, we grab liquidity and then we pop higher, running this high. Now, let's talk about what happens after we run this high. It's either we move higher, we retrace, or we consolidate. One of the three is going to happen. We're either going to expand higher, as we see here. We found support at the previous day high and continued higher. So that is a strategy in itself. Once we break through the opening of the previous day high, do we find support there? And if we can find support here, we can potentially see a higher move. Now, there are times that we don't see a higher move. We just consolidate, as you see right here. Let's look at another example right here. Here is one where we break through the previous day high and we never come back to it. Your goal as a trader is being able to identify these previous day highs and knowing how they react around them. Here's another example where a single PD break day where we have 9:30 open close to this high. This would have been logical for us to think that this is the high that's going to be ran. But what happens? It aggressively moves the other direction, and where does it end? Previous day low. And then it consolidates or it's choppy the rest of the day. Here's an example of a reversal or a retracement once you hit the previous day low. So our target, guess what time this is? You guessed it, 9:30. This is why we want to identify the New York 9:30 opening price. We run within the first 30 minutes, we run that low, we run a little bit lower, and then we bounce and retrace. This right here is what you want to memorize. This is what we want to see. If we go into a lower time frame, which we do this, you can use a breaker, you can use an inversion model. I have plenty of videos for you to check out on how to use those models, but we want to use them in context of the higher time frame analysis. And this is our higher time frame analysis. Once we hit our previous day low, there's a high probability that we're going to retrace. And can you get 10, 15, 20 handles? 100%. This is what we want to look for. Here's another example of how we run it in the AM session, and then price opens at 9:30 and we're really high. And what does it run for? Within the first hour of trading, it's already tagged the previous day high sitting right here. Now look at these wicks. If we go into a lower time frame, you will see that these wicks represent retracements. Once we hit this previous day high, it actually moved from this low at 20,364 all the way to 20,443. That is an 80 handle move. Can you get 10 handles out of this? Absolutely. This is why we want to identify and key on previous day highs and previous day lows. The only day that you guys really want to avoid are days like this, where neither the previous day high or the previous day low are ran. Price action is just indecisive. It's going up, it's down, it's up, it's down. It's indecisive, and it's very easy to lose profit, to go negative on days like this. You want to avoid these at all costs. So let's give one more example. What did we have right here? We had a fake break day. This fake break day made a high and low, and the days after fake break days are some of the best days to trade. You get lots of movement and great price action. Here's an example on a Monday where we hit the high. When do we hit this high? At 10:30. So here's 9:30 opening price. What happens? We run the high and then we reverse. Now, if you want to know how to trade a reversal pattern here, check out this video right here, and I'll see you guys in the next video. Take care.